President George, thanks for joining us so much.
Good morning.
I want to talk about what's happened to the market the last couple of days. It's gone down, in a couple big steps here, and it's weak again this morning. Talk to me about the way you as a Federal Reserve President look at the stock market in terms of the economic impact. Does it get to a point where you feel like financial conditions have tightened too much?
So looking at the stock market is an important price signal, as many others are, to watch and see. And this is a time of uncertainty. It's been a rough week in the equity markets. And I think the combination of the uncertainty going on in the world, the fact that the Fed is beginning a rate hike regime, causes investors to try to figure out where do they settle on how valuations might come out. So I think in some respects, not surprising that you see this volatility. On the other hand, not to be dismissed, to watch and see what signals it's offering for tightening financial conditions, which we've been seeing for a while.
Is that something you're after? Is a weaker or a lower stock market?
I think what we're looking for is the transmission of our policy through markets understanding, and that tightening should be expected. So it's not aimed at the equity markets in particular, but I think it is one of the avenues through which tighter financial conditions will emerge.
I think maybe I'd ask this for a lot of equity holders out there. How do you know when enough is enough? You're down almost 30% on the NASDAQ. You're down 18% on the S&P. How do you know when financial conditions have tightened enough? And also, what about the economic impact, the knock-on effect of a reduced wealth effect?
So for a Fed policymaker like me, where I am focused on when enough is looking at our inflation target. And so right now, inflation is too high, and we will need to make a series of rate adjustments to bring that down. We're also going to be looking at what's happening on the demand and the supply side to know when those things might come into better balance for us.
I think it'd be great to pick those apart. Let's talk about the demand side. There were some reports yesterday from some retailers that suggested maybe there is some trouble ahead for the consumer. What do you see when you look at consumer spending right now?
So in general, Steve, when we look at households, they've been in pretty good shape. People have jobs by and large. Their balance sheets look better than they have in some time, and they're spending, and they've been spending on goods. As inflation has become a major factor. So now people are having to think about the price of gas they're putting in their cars. They're having to think about food prices. We do hear from people in our region, businesses and others, that trade-offs are starting to emerge. So maybe when they go out to eat, they're not getting an appetizer. They're skipping dessert around that. So those kinds of things, I think, are going to begin to feed through the data to see how consumers are responding to something they do not like, and that is high inflation.
When you look at, I think the big pivot of the Federal Reserve goes back to November of 2021. When you look at the time period and the evolution of the economy over that time period, do you feel like your policy is beginning to have an effect? Are you feeling comfortable that you're going to succeed in bringing down inflation?
So I think we will succeed in bringing down inflation because we have the tools to do the heavy lifting on that as it relates to demand. And we do see financial conditions beginning to tighten. So I think that's something we'll have to watch carefully. It's hard to know how much will be needed to make that happen, given all the moving parts that we see today in the economy.
You've said in the past that you think we ought to get to neutral quickly, or I guess the chair has used the term expeditiously. What is neutral, and how quickly ought you to get there?
That's a great question because we don't know what neutral is, as you know. Neutral is an estimate, and I think that is particularly hard to focus on today because when you have high inflation, when you see these imbalances that we have here, when we see how persistent these supply constraints have been, I'm not sure picking a number around neutral is really of much value. I think for me, what's more important is at what point will we see inflation level out and then begin to decelerate. That, I think, will tell us something about where we need to go with monetary policy.